All right, welcome back, and joining us for a look at the day's market-moving news is Coertze from Cartesian Capital. Thank you so much for your time, Carl. It's been quite an interesting month. Of course, the markets are ending off the last day of trading in April on a sour note. And of course, this as the Fed is starting its two-day meeting. We will have the next interest rate decision tomorrow. I guess I can imagine that the markets are expecting unchanged interest rates there. But in terms of messaging, what are you expecting, considering that the data that we have seen coming out, wages still ticking up, PCE inflation still quite sticky, but also an economy that is slowing down?
Hi, Zanati. Thanks for having me. Yeah, rate cuts have been like a mirage in the desert.
Yeah.
The closer you think you're getting to one, the further out they disappear. So the market is pricing in that the Fed will hold at today and tomorrow's meeting, yet all ears will be tuned to Jerome Powell's statement. The resilience of the US economy has been evident in its ability to withstand the current rate levels. Powell's somewhat dovish tone in December coincided with the market rally shortly after. Managing the market's expectations can be a bit like herding cats, but I anticipate that Powell will be aiming for a marginally more hawkish tone to deter premature market reactions to anticipated rate cuts later this year.
Yeah, indeed. It's going to be quite interesting to see what he says, but also how the markets digest it tomorrow. But of course, we will only be seeing that reaction on Thursday on our side. Let's come back home to the JSE and take a look at some of the news that the companies came out with, particularly coming from the resources sector. So let's start off with Implats. They're coming out with a 9-month production report. We did see that share price tumbling over 4%. Of course, reporting an increase in production, but also still really pointing out to the terrible PGM pricing that we are seeing here, that margins also remain compressed. What did you make of that, and do you think that the market's reaction was justified on this report?
Yeah, it definitely seems like miners were dragging the JSE lower today. I think Implats and Harmony came out with decent production updates, while Glencore's update wasn't as impressive. So with Implats, their 9-month production of their 6E basket was up 16%. But like you said, PGM prices are still lackluster and putting pressure on the company. Harmony, in their 9-month production, gold was up 10%.
Yeah.
All-in sustaining costs were down 2%, with 2024 guidance revised higher. And Glencore, on the other hand, production volumes for gold, copper, zinc, and cobalt were relatively flat year on year. Nickel volumes, however, increased 14%, and guidance for the year remains unchanged.
Yeah, it's also still quite interesting because, I mean, you talk about Harmony. It seemed that all the metrics were moving in the right direction: production, pricing, guidance revised higher, but the market still punished that stock. So it's quite interesting to see, and sometimes the stock just being sucked into the negative sentiment that we are seeing in the broader market. Let's talk about We Buy Cars, because that's on the other side of the spectrum, where we saw investors plowing in there. That share price up more than 4%. Of course, it did come out with a trading update for the interim period, saying that their preferred measure of earnings, core headline earnings, actually increased. But looking at a headline earnings per share that we usually look at, that has gone in to a loss. What do you make of that? Do you think that just the difference in that is just a technicality, and that actually investors have it right by going into the stock today?
Yeah, listing a company on the JSE is not a cheap exercise. And in We Buy Cars' case, they incurred IPO-related costs of 45 million rand. So if you look at the headline earnings per share, that is expected to drop by more than 100% from a profit to a loss, while the core headline earnings is expected to be 24 to 29% higher. The core earnings reflect that operationally the company is robust. They're a well-known brand with a strong market presence, and they saw increased sales volumes, higher average selling prices, improved margins, and better cost efficiencies due to economies of scale. I still think that the stock will have to sink for its supper every earnings season, though, as it hasn't received much love from the market since it IPO'd.
Yeah, something that also has not received much love from the market is MTN. And of course, we know that that's mainly because of the headwinds that it keeps experiencing in MTN Nigeria, with that unit reporting a loss there in the first quarter. What are you making of just MTN Nigeria, the performance there and its contribution to MTN, but also really still keeping in mind how crucial that market is for MTN?
Yeah, if you remember last month, MTN released its 2023 annual results, where profits plunged from 24 billion to 4 billion rand. That was down 83%. And this was mainly due to the devaluation of the naira against the dollar. So like I said, Nigeria is MTN's largest market, and it makes up a third of the group's revenue. So it is important to understand what is happening in this market, and it is still not looking good. MTN Nigeria reported a substantial foreign exchange loss of approximately 9 billion rand in the first quarter due to further depreciation of the naira. On a positive note, however, the company did see 32% growth in service revenue, but they continue to grapple with high energy costs and a relative and regulatory headwinds. So the Nigerian unit is in a precarious position, and the group is responding to that through a number of initiatives. One, which is trying to reduce its US dollar debt and diversifying the currencies used for purchasing IT and network equipment.
All right. Well, Carl, let us get to your stock pick for today. What are you hanging your hat on?
Well, yesterday, my colleague, Antonio Senatore, his stock pick was Ferrari with the ticker symbol RACE. And in sticking with the racing theme, I'm going with the Formula One group as my stock pick. Most of the listeners will be familiar with the Netflix show Drive to Survive, which captured a large audience and created many new F1 fans. The sport has been growing at a rapid pace in the US. To sustain this growth momentum, new races were added to the circuit, such as the Miami circuit and the Las Vegas night race. Whilst Formula One's current US broadcast deal pays less than $100 million per year, NASCAR, which has twice as many viewers per race, renewed its broadcast rights for $1.1 billion per year. I am of the belief that Formula One will still grow and be able to better monetize its US viewership in the years to come, and I see this as an exciting long-term play.
You guys have made me curious because now I'm keen to see what cars are parked outside Cartesian Capital there by the parking lot. I think I owe you guys a visit. Thank you so much for your time and for your insights today, Carl.
I think you would be surprised.
Thank you so much.
Thanks,
That was Coertze from Cartesian Capital.